Philip Chan. He is Managing Director of Institutional Equity Sales at Shenyin Wanguo, right here in Hong Kong. Philip, thanks for coming in. Okay, well, what's your overall view then? Is that it?
No, we are cautious on the banks, generally speaking, because this slowdown in the earnings growth is being well expected. I think, given the two main areas you've got to look at are the liquidity has gone up, but loan growth has been slowing. So therefore, the NIM is under pressure, and then also the fact that liquidity is better means that there's more risk of, say, things like NPLs coming out, and that's
non-performing loans is what you're talking about now. But non-performing loans, I'm sorry. I mean, when is a non-performing loan a non-performing loan?
Well,
there's so many ways of getting around this on a balance sheet.
Yes, there are. The thing is that there has been steadily growing in some certain areas, particularly the coastal provinces. So that's obviously been a factor of, say, the export-related businesses which have slowed down. But the thing is, we don't think that is we should be overly concerned about that. The issue about the local government loans and that whole issue, we think is more or less discounted in the price now, because we don't think that is such a problem which is unsurmountable by the Chinese banks. So we think that in valuation terms the banks look very cheap.
But you're not recommending them particularly. You're saying be cautious.
But
if they're cheap for a reason, is what you're saying as well.
Yes, that's right. So we'd be very highly selective. We're only recommending a couple of the smaller ones. If you're talking about buy, like Chongqing Rural Bank and China Minsheng Bank. For the large ones, probably you could stick with ICBC would be okay. It's just that we don't see that there's massive sort of outperformance coming. We saw the outperformance in the run-up to Christmas. The banks have been pulling back since over the last few weeks.
All right. Okay. Well, is there anybody that you would say is a good bet, though?
As I said, I think for the large ones, you then probably stick with ICBC. That one looks okay. We're not actually saying that any of the banks are a sell, and we don't think that they are a sell. It's just that we don't think that they're going to. There isn't much of a catalyst to raise them. Yeah.
So what's being priced in at the moment with these banks, generally speaking?
Well, I think most of the bad news is short-term bad news has been priced in. What people are hoping is that there's going to be some stimulus measures.
Yeah.
Right. And that was why the banks ran up before Christmas. But because we didn't have very strong stimulus measures.
Well, when you mean by stimulus, we could have more loosening of monetary policy, certainly. And we were expecting a reserve requirement cut. Every day we expected. We haven't been getting one, though. We haven't had one for a month or two.
Yeah, that's right. Well, no. The thing is, I think that, like I said, expectations are probably too high for the rate of stimulus. And we think that stimulus is going to come, but it won't be as aggressive as 2009. So therefore, you can't expect then a big pop in the stocks either. So,
okay, I mean, we're going to get more of this. I mean, we're loosening of monetary policy, and if so, when? And would we actually have interest rate proper reductions?
No, we don't look for a cut in interest rates in the short term. It really depends on how, because we think that actually the growth in China is still fairly robust. There's no need for them to cut interest rates. Reducing RRR is definitely a possibility, so we think most likely next month.
Philip, thank you so much for coming in. Philip Chan.